I'm here with Pete Robinson, Head of Investment Strategy, Fixed Income at CIP Asset Management. Welcome, Pete.
Thanks for having me.
Pete, what do you think sets CIP Asset Management apart from other managers in this space?
Yeah, great question. I think for us it's really three things. Number one is our governance framework. So we're part of a $100 billion funds management business. We manage $15 billion across public and private credit markets. And with that comes a whole range of additional resources that give our investors comfort on our investment process and the investment outcomes that they can expect. So that goes into things like marking to market on our portfolio, independent credit risk assessment of the portfolio so that they can see that they're really generating an additional return and additional illiquidity risk premium on the investments that we're making on their behalf. And also in the event of a downturn, proper resources available to work out any non-performing or underperforming exposures.
Do you see, Pete, credit as an asset class that was formerly institutional only, but it's one of those scenarios where it's now flowed down to the retail space and is a perfectly acceptable investment allocation to make even for retail investors?
Yeah, I think so. I think it's opening up to retail. Certainly that is the case, and I think the broader range of products and risk return profiles that are available in the credit space are really being opened up to retail investors. We talk a lot about the menu of credit options that are available to investors, and institutional investors have long used credit in a variety of different ways, to incrementally add yield to their defensive allocations in their portfolio, or to reduce the amount of equity market beta that they may have in their growth allocations. And I think as more products come out to the market and are available to retail investors, they're going to have more choices available from that menu that institutional investors have had for some time.
You just touched on some of them then, but what are the primary roles that investors give credit? Sorry. 3, 2, 1. You just touched on some of them then, Pete, but what are the primary roles that investors allocate to credit? What are they looking for it to do in their portfolios?
Yeah, it really depends on the investor and the portfolio itself. So for some investors, they may be looking for stable sources of income. Now, with interest rates at very low levels, they can't find that from the traditional sources. And in fact, those traditional sources come with a lot more capital risk than they have done in the past if interest rates actually rise. So a defensive short duration credit allocation can really provide them that income that they're looking for within their portfolios. Equally, you might have investors who run a more balanced fund allocation but are concerned about the correlation between equities and traditional fixed income products. And they look to take some risk off the table by allocating to, say, a private credit strategy, which gives them both the yield that they wanted from their blended equity and fixed income allocation, but without having to rely on that correlation argument that when equities sell off, rates will rally.
And even with... Sorry. 3, 2, 1. And even with those varying roles that investors might assign to their credit allocation, given the extraordinary year of 2020 in terms of a pandemic-induced market slump and then recovery, do you think overall credit performed the role well that people had given it?
Yeah, look, I think credit performed well through this environment, but really every risk asset did. Let's be honest here. As you said, there was an unprecedented amount of monetary and fiscal stimulus, a huge tide, we call it a king tide of liquidity that hit the market in 2020. The big question is how that king tide of stimulus and support is withdrawn, and we think the coming years are really where credit's going to prove its mettle in performance relative to equities and traditional fixed income products.
Pete Robinson from CIP Asset Management, thanks for your time.
Thanks, James.